I made enough money by the end of 2017 to say like I'm gonna quit my job and become a full-time ICO investor. I'm one of those guys that can't really stay in industry for too long. I've never had more than a year in one industry or a job. There's a lot of things that we've been building out to stay competitive and stay relevant in the space, and that's my vision for the next 3-5 years in terms of how I want to grow like Momentum 6. For a new asset class to grow, there has to be more capital coming in. There's no other way. We have enough tech to at least go for the next 5 years.
Yeah. I think probably sit here for the next couple of hours with you asking you questions. Hello and welcome to another episode of Token Talks, brought to you as ever from our studio here in sunny Singapore, where the aircon is always set to high. Today, I'm really excited to welcome a guest onto the show who's really deep in the VC space. His name is Galam Won. Garlam, welcome to the show.
Thank you, Sam.
Well, listen, really appreciate you coming in and really excited to hear a little bit more about, you personally and also what you guys are working on at Momentum 6. I think that you're going to have some perspectives on kind of the whole VC space that are going to be really interesting for everybody. So yeah, really appreciate you coming.
Of course.
Maybe we can get started just by you introducing yourself a little bit. And I'd love to hear a bit more.
Yeah, so Galam Won, I'm the managing partner and the founder at our capital called Momentum 6. It's a purely GP-based capital, so we haven't taken any LP money. It's just a couple of us that really got together that was really, really interested in the space about, people experimenting, about, kind of what we saw with blockchain and the whole crypto scene that was happening. And we just kind of got together to invest together, right? So my experience in crypto is... I guess crypto kind of like gathers all people from all different industries and sides. But most importantly, I think it comes from mostly tech and maybe finance. It's like a weird merge of the two. So I have ADHD. So I take the pills now, but I just got diagnosed like 2 months ago. And been taking those pills. But before that, I think my attention span and like my brain has always been kind of jumping around in different industries, and I'm one of those guys that can't really stay in industry for too long. I've never had more than a year in one industry or a job, so I've always been kind of moving around. I've done investment banking at JP Morgan. I've done various different consulting at Deloitte and some of the boutique consulting. I actually ended up at this firm called Ashley Madison, which is a dating platform for married people. So they, while I was looking for a product manager job, they kind of had that opportunity. So I thought it'd be a interesting opportunity, to say the least, to kind of go in there and see how everything kind of worked in there. And while I was in there, I, met a lot of interesting people in there as well. And that was 2017, and Bitcoin was just kind of getting the mainstream. Bought my first Bitcoin around maybe 1,200, 1,300. And then, it kept going up and up because obviously there's a lot of interest, and then ICO scene started happening. So I think for us, we had a group within the company that all started talking about ICOs. We had meeting rooms booked to talk about it, invest together, analyze, sending, it was wild. You were sending like this money to random address, hoping that the guys will honor that and, send you the token back. So that's how I got started in crypto, 2017. And then I made enough money by the end of 2017 to say like I'm going to quit my job and become a full-time ICO investor. I was going to put that on my LinkedIn as well. I didn't, for better judgment. I was like, no, this is not going to be good. So, which was a wise decision. But if any time, someone quits their job to do something, I think usually that's the top signal. And obviously for me as well, December was obviously the top. And me not really knowing how to navigate the whole investment space and cycles, like I've never really, gotten access to that money before, so lost everything. With 90% of the people in the space, making money is one thing, but keeping is another thing.
Mm.
So yeah, started looking around. Luckily, got noticed by one of the VCs in China that just raised the fund. So eventually became their managing partner for the US side. Started doing a lot of the portfolio management, deal flows there. They were all also ETH based funds, so they kind of like struggled in 2018. That's when I found out Harmony in San Francisco, so decided to join them as head of marketing there, and started really understanding more on the liquidity side on because I was marketing and marketing kind of heavily ties in with liquidity, right? Because of that, like obsession almost with liquidity, I started really digging into like, okay, like how is the market working while I was doing, the marketing at Harmony. It's like, what is like, what are the price movements? What are the, where is the liquidity coming from? What are the gaps? What are the different vehicles that could be potentially happening, right? And, I have a finance degree, and the experience at JP Morgan really helped a lot as well. So yeah, that kind of got me into, started thinking about, opening a fund potentially. And for me, VC fund that I had experience with in China, it was very interesting in terms of how VC investments get treated in crypto. Yeah, like the public market, the way that traditional asset, the way that crypto assets go to public, it's the return becomes very similar, where you get astronomical return when it does go to public, right? And there's more capital that wants to hold on to those assets depending on what the reason is. But the timeline gets very short in crypto, right? Sometimes they launch within a month or two, whereas ICO, IPO, you could be waiting for 15 years, 20 years, or 30 years, right? So for me, when I thought about VC and the kind of trade-off, right? As a VC, you're always trying to trade off two different things, which is on one side you have capital and liquidity, and the other side you have price and time, right? So sometimes you're trading off, like your premium gets a lot valued more in crypto because the time and the price is very, very, very undervalued versus the capital and liquidity that you're providing in a bull market, obviously. So we started VC kind of based on that thesis. And yeah, luckily 2020 was the DeFi summer. It everything just kind of came back full force, with the rise of Uniswap, yield farming, NFTs. Yeah, now here we are. So Momentum 6, because we're GP capital, what we're trying to do is we don't want to leave, and I know there's a lot of tourist funds that kind of come in during the bull market and exit during the bear. We have been building, and we have been increasing our employee count, the things that we do, things that we build. So we have about 6 different businesses under the Momentum 6 umbrella currently. Momentum 6 invests. We have 2 different entities that are doing research. M6 Lab does a lot of research and research for like publications and VCs, whereas like the Crypto Illuminati is more of a retail kind of like degen vibe, where we bring in all these like Twitter researchers and Twitter research sleuths that are doing research of their own, and we try to give them more highlights into doing daily like Twitter spaces or newsletters or things like that, right? We also have like a research arm in Japan. We have a job board as well, where people can submit jobs and they can look at it to like hire talent from there. We have a publication that we're kind of building out. We have a new accelerator that we're building out called Symbiote as well. And marketing firm as well. So there's a lot of things that we've been building out to stay competitive and stay relevant in the space. And that's my vision for the next 3-5 years in terms of how I want to grow like Momentum 6.
Amazing. Hey, well, listen, thanks for sharing your story.
Yeah,
It's awesome. I think probably sit here for the next couple of hours with you asking you questions about the early days of your ICO.
Yeah,
ICO
it was
passion,
crazy. Yeah, I don't know how much I can say in public, but yeah, it was crazy times. Yeah.
Sounds amazing. And also just like your timing and foresight to get it right with DeFi Summer last time around in 2020. That's I love hearing these stories. I just want to plug, actually, you just talked about Illuminati and M6 Labs, and actually also your Substack that you guys have. It's great, and it's like it's super low bullshit, and it's really engaging. And
Thank you.
Yeah, I mean, anybody watching, go check it out. It really is cool. You mentioned this is kind of where you kind of see your competitive advantage, right? I guess thought leadership, really understanding the space, having these niche communities. How do you use that, as a VC? Like, yeah.
So I think for us, a lot of it, when it comes to deal flow, when it comes to, because I think at the end of the day, we need to be the ones that has little more conviction and little more foresight and little more research into what we invest in. And obviously during the bull market, we took that advantage to invest in, some of the thesis that we thought was working. Which is like, one of the things that we did was we heavily went into some of these ideal projects because I think what we kind of understood at the point was that the DeFi summer created this ethos or paradigm with every other chain, EVM compatible chain, to launch their own chain as well as their own ecosystem. And once that launched, there were all these fundamental DeFi stacks, lending, AMMs, bridges, all of these, right? That started launching in there. So you kind of created this black hole of capital that came in. And the early days of crypto, especially when bridges are not that familiar, some people were still not knowing how to use MetaMask and things like that. They went in there and because there was a lot of friction between moving capital between two chains, they kind of stayed in. Once the capital went in, it stayed in for a bit, right? So initially it was like going for some of these like low hanging fruits, like some of the AMMs started getting like valued up, maybe bridges, maybe some of the lending protocols in there. But after that, it became harder and harder to find the next alpha, and crypto just loves correlation traits like composability, fungibility, forking. Correlation is one of the big meta or ethos is crypto, and you see everywhere, right? Like if one successful project happens, there's going to be 50 other copycats next week, right? So for us, the thesis was that, okay, like these IDOs are coming in and they provide reliable base of investors, as well as the founders are all doxed, so they have less of a rug risk, as well as people start building brand on how well these launches are doing, right? You start building brand on these platforms. So our thesis was that, all right, like if capital's coming in, I think these will do well, which was a big win for us on a lot of those plays. So for us, yeah, it's like basically with these platforms and distribution channels, we want to make sure that we share the thesis and we share our thought process and like the research that we're going into. I think first is to get people to understand just day-to-day kind of like activities that are going on, and that's what our newsletter does. Like we go through Discords, Telegram, Twitter to make sure that they understand the 24/7 nature of crypto and everything that happens within, right? But the next step for us, I think, is to share some of these ideas, share some of these thesis and convictions that we have, so that people start, following along more, right? And obviously, distribution and thought leadership becomes one of those powers that we as VCs can leverage to other companies to either lead deals or have that like a lot of like big protocols and capitals, sorry, a lot of big funds and capitals, right? They obviously use the capital and some of the thought leadership to do that. We kind of want to do that, but with more of the distribution side. Yeah, because like I said, we are not an LP based fund, so our competitive edge is going to be something absolutely different. Yeah.
Got it. Okay, makes perfect sense. So you also mentioned like you have a kind of 3 to 5 year plan for Momentum 6. Sometimes it does feel like we're kind of in this vacuum, right? So you have like traditional finance and capital markets, and then you have crypto, which is like a tiny part compared to that.
It used to be this big, but
right?
Yeah, sure. Yeah.
I believe, right? But at an event like Token 24/9 this week, there was so much discourse, so much conversation. I actually thought it was pretty cool.
Yeah.
People talk about mainstream adoption and Web2 companies coming into it. For a company like Momentum 6, do you guys need that in your kind of 3 to 6 year plan, or is it fine that we're still it's a crypto community? You think that community is going to grow enough to support your business, or there's enough there for you already, or is like
no,
is some kind of mainstream
enough.
Adoption that's really
yes.
Okay,
yes, it's at the end of the day, I think the thesis has always been this is new asset class. It has to, for a new asset class to grow, there has to be more capital coming in. There's no other way. Whether that comes from usage, whether that comes from process revolution, whether that comes from governance revolution, whatever that is, right? It has to come in, because I think if you talk to a lot of protocols or a lot of projects right now, they're all just customers of each other, and that's not healthy. It has to, at the end of the day, have more variety in terms of how revenue gets created, how usage gets created. And I think right now it's very two-dimensional in terms of how some of the utility happens, or how revenue gets happen. And I think what that leads to is actually also less diversification, which leads to things like Luna, which leads to things like Celsius, because if you don't have other areas of diversification of capital or revenue streams that are coming in, or yield that's coming in, right? Everyone's just at the end of the day, you become the yield, right? That's I don't think that's ever healthy. So yeah, I think I 100% think there needs to be more usage and more just like more players coming in from variety of different categories. That's why we've been focusing more on the user experience and UI side, especially when we're looking at projects as well, because to be honest, I think we have enough tech. I really do think we have enough tech here. We have enough tech to at least go for the next, 5 years. Yeah. We don't need another chain that does 100,000 transactions per second. There's barely even like 1,000, right? Like why are we building an airport if we're just driving cars, right? Like it's just like one step at a time. And I think that's where the usage comes in, right? I think usage is gonna kind of bridge that gap, so that we do need more scalable. We do need more scalable blockchains. We do need more scalable bridges. We do need more easier way of lending, whatever that is, right? But just in terms of how I want to see the industry evolving, and like how the projects that we want to back are the ones that really focus on the user experience side of it.
Amazing. Couldn't agree with you more. Let's get into the specifics of that then. And I guess I'm not talking about specific projects, but from a kind of, I guess, investment thesis point of view, what are the kind of key themes that you see as being, valuable and important moving forward? What are you guys looking at?
For example, like I think I can name maybe 3, just top of my head. So I think what FTX showed us is the danger of some of these like monolithic monolithic organizations or monolithic execution of liquidity, which just basically means that one company is doing everything. And I think in a space like crypto, where the regulation is more based on the code, the more process that one monolithic organization owns, the more that there's going to be flaws. Because a lot of the, if you look at the traditional market, I think there's a lot of, processes, and within those processes that are regulations that gatekeep those process, right, on each step. Now in crypto, like, because it's global from the get-go, the regulations are much harder to enforce, obviously. So if you have one monolithic organization that's kind of like, basically owning the entire liquidity, I think that can be very risky. In the case of like, FTX and some of the other, 2022 kind of mess ups that we've seen. So we want to see, like, as a first theme, I think we want to see, more modularized execution of liquidity, where yes, there are, it's all decentralized and it's all still like in line with the ethos of crypto, but maybe there are various different depositors, there's different custodians, there are various different I guess like these custodians that kind of own that deposit amount, and they're regulated in their own way and they're collateralized in their own way, so that the risk is diversified there, right? Because that's the first risk, right? Like FTX, obviously, like, if they own all the deposits, they have and that's literally every single exchange that went down. Usually it's like that, right? You have a founder who starts dipping into the customer deposits, something goes wrong because market will always win, and now they're in trouble. So like, different separate collateralized separate deposit places, and then maybe
just to add to that also,
the
if you have a monolith like FTX, the reliance that other big industry players have on someone or a unit like that as well is just that was what was so fatal, right? I mean, we can see now with all the Solana that's tied up in FTX, and that's just one part of a huge story.
It's systematic risk is like a meme in crypto because it happens so often. Systematic risk is literally your neighbor. Systematic risk is like the person you're talking to at conferences, right? So I think it's healthier, at least for now, to have that divide a little bit, and then maybe the middle layers are the ones that kind of execute those trades, whether it's like clearing, settlements, lending, borrowing, whatever that is, right? Things that you can do with your capital, execution. And then, at the top, you have maybe, these, I guess like customers that are like kind of using those two to, settle trades, and, maybe regulators that are kind of regulating all that, right? So various different forms of regulation. So I think that is one of the things that we're looking at. So, something that kind of unify some of those layers, maybe the guys that are doing the private banking that comes in, or prime brokerage, like, or EMS solutions, or wallet unifying layers, whatever that is, right? So that's one. I think that's very important. The other side with maybe some of the themes that we've been looking at, maybe some like Web 2 to Web 3 conversion in terms of resources and capital and some of these things. I think that's also a big theme as well. RWA, I'm not just talking about RWA, which is like the most obvious thing that comes up in these conversations, but maybe RWA more, maybe even gaming, right? Gaming has a lot of risk. As game studio developer, we see maybe 4 big risks with gaming, I think. First is development time. It takes very, very long for a game to even arrive at an MVP stage where you can even test it out and kind of get a feel for how users like it, right? And during that time, number two, you're burning a lot of money. You can't really slow down your burn because you have a milestone that you need to hit. This is not an AMM, or this is not a trading tool that creates revenue 6 months in, right? It's going to be a very, very long burn, and you kind of have this like lottery at the end whether to be successful or not, right? So it's very risky. Number three is, even if all of that is done after like maybe 3, 5, 7 years, like even if the game does finish, there are a lot of chances that this might not be even be fun or be exploitative. Like I think some of the big games, like even like Diablo, right? Like after season 1 ended, like the users dropped down significantly because the users didn't just find anything to do after, right? So like you just gotta constantly like keep that edge, which leads to number 4, which is the biggest risk, which is because it's digital and everything in the digital world is the number 1 player gets 95% of the market share, number 2 maybe gets 3%, and the remaining 2% gets shared between number 3 to 20, right? So for a VC to kind of hear those probability, it's very, very, very scary. So first time kind of like founders coming into gaming, trying to build games, I think it gets very risky. We had a different thesis during the bull market that because everything in crypto is token-driven adoption, game seemed like a very, very logical play that people can just kind of go in and get token, and obviously Axie kind of proved that. We were wrong because bull market didn't last, right? So we realized that once bull market ended, no one had any incentive to play these games, and we see that with numbers on DApp radar or whatever, right? That the gaming numbers are just drastically dropping. So I think because of that, the Web2 Web3 kind of like resource and capital conversion that I was talking about is that we want to see the guys that can take advantage of the Web2 players coming into Web3 and helping that transition, whether that's through capital, whether that's through infra, whether that's like maybe infrastructure that can accommodate Web2 games that are already built by experienced and seasoned founders that have been building games. Because I think a lot of the Web3 founders that we've seen last year at least, or the year before that, was that they saw an opportunity and kind of came in to build these games, and they've never built a game before. And obviously some go well, but most don't, because of these risks, right? And we want to maybe deviate away from that risk a little bit and back the companies that don't have that risk necessarily, because all that gaming risk is taken on the Web2 end by the seasoned founders. And once they build it and they want to transfer over to Web3, whether it's converting some of their gaming aspect on items, or some of the like mystery boxes, like all of these like gimmicks that you can start playing around with tokens, because crypto essentially becomes a more of an incentive layer. It becomes like ownership with NFT and incentive layer with token. So we kind of want to see those founders, back those founders, at least for now, while the industry is relatively young. So I think, and RWA, I don't have to mention it. It's
seeing it
huge
already.
amount of capital that's sitting in there, whether that's collateralizing their Web2 assets to get Web3 assets and increasing the pie from there through, whether that's treasury bond. So I think one of the most obvious, I think, use case for Web2, Web3 capital flow is, you collateralize Web2 assets in Web3, you take out Web3 assets or USDC, USDT as a loan, and you reuse that in the Web2 space to get yield that comes back to Web3 space, right? So the zigzag. I think that's the most obvious thing that I can think of right now. Maybe other people kind of like differ, but I think that has a lot of opportunity to grow the size of the pie in Web3. So I'm sure like your other guests will go on and on about what RWA, so I'm not going to go into it. And then I think I think maybe those two are I had a third one, but I should have wrote it down. Those two are the biggest things I can think of right now.
No, that's really great.
Yeah.
It's also, I mean, something I'd always wondered about, or not wondered, maybe been surprised about, was kind of that Web2 gaming had not adopted more elements of kind of what's happening in the Web3 space.
They can't.
You know, right?
They can't.
Okay.
Right now, crypto is toxic.
Yeah, I mean,
public. Yeah, even
for sure.
Mr. Beast, he created Creators League, had an NFT kind of like element on it, and he had to pull back because all the viewers and audience didn't like that, right? So everyone in that Creators League, which are all these big YouTubers and influencers, they were getting backlash, right? So I think we live in a bubble where we're like, oh, like these are really cool, and like everyone will like these, and it's a revolution. It's like ownership, and it's all of that, right? But at the end of the day, it is a bubble, and outside of that bubble, I think crypto is still very much tainted by the big news that happens, where it's Luna, whether it's FTX, whatever that is, and I think that's why I think the user experience side and maybe more of a stealth implementation of crypto, not so forward, is a little bit better. Like you show them the use case first, like how China did it with WeChat, right? That was one of the best use cases. They completely skipped the credit card stage because without really them knowing, they provided value with this whole QR code, kind of phasing out cash into QR code, right? And no one really, ask. They weren't like, QR code is it, right? It's like, hey, you have a chat. We're implementing QR code here. That you can pay for things, right? And that was like one of the kind of like the side application that became a main application, right? So I think that approach usually works better. And if we think of crypto as revolution, I don't think revolutions ever from 0 to 10 usually happens that, you kind of get incubated by the bigger players, until it's 8 or 9. And then 10 is that last step. And I think crypto might need to think about like approaching the same approach there.
Yeah, nice. Hey, so Garlam, I've really enjoyed speaking with you today. Learned a lot personally, and really grateful for you for coming in. Before we wrap up, I'd love to get your point of view on kind of how you see the next, say, 12 months or so panning out. Obviously, there's a lot of talk at the moment about some, I guess, factors that could have an impact on our kind of crypto market. But yeah, what's your take on things?
Yeah, there's a lot of sound bites that are happening, obviously, with the halving, ETF approval, BlackRock, all these like institutions coming in. So I don't want to repeat those sound bites. It's not interesting. Everyone can kind of find out. I think what is really interesting is if you look at the asset kind of life cycle and how they evolve, I think we might be at almost like the last stage before it becomes very, very solidified and gatekept. So maybe this is the last stage that someone can really go from 0 to 1 or 0 to 10 or 0 to 100. And some of the guys that are deep into the space maybe starting to feel that as well. 2024, I think, is going to be very interesting. There's a lot of variables. Obviously, we're not traders, so we're not going to dictate, or we're not going to speculate on like what the market will do. We'll do what we can. We'll do what we kind of find in opportunities. And what we find opportunities right now is, I think, the secondary market. When the sentiments are down, and I think it's interesting with human beings where extended, muted, or depressed market usually leads to people losing hope. And even if they went through previous cycles, or even if they've heard or seen previous cycles before, we see a lot of exodus right now. We see a lot of firms that are hurting. So I am urging, our capital side at least, to take more approach on the secondary market side, because like I said in the beginning, the initial thesis was that you're balancing capital and liquidity with, the price and time. And before, in the bull market, your capital was almost overvalued compared to, this the time and, I guess, price that you had to like sacrifice, I guess, right? Now it's the opposite. Founders, if they don't raise now, they can always raise a year later. And maybe they don't get a team yet. They will still have a white paper. They'll still have a deck. Maybe they'll just, stay out for a year and maybe a year later, right? Or, if we do end up raising, they might have to have a down round depending on what the market looks like. And I think that becomes a pretty big risk for especially like VCs, especially like us. We don't have any requirements or mandate to deploy capital, right? We can deploy anytime we want, or we can deploy as much as we want. We can deploy as little as we want. So for capitalists like us, I think we see that as a big opportunity cost. But however, on the secondary market right now, your capital is getting valued at a premium, because some of these people are either losing hope, or they have less of a runway than they thought. They maybe poorly manage their risk, and they're like going through something, right? So we kind of want to take an approach into maybe finding some of those opportunities in the near future. And I mean, our team's very smart. I try to look at things from being not too early. I think it's not beneficial in terms of ROI and profit for you to see too far ahead, 2, 3, 4, 5 steps. I think it's usually the guys do really well are usually like maybe 0.5 to 1 step, right? You want to go into maybe automated car while it's in like a horse wagon, right? Like you can't think about a car when everyone's riding a bicycle, right? It's just not feasible. It's not beneficial, right? Maybe your vision and you kind of like make that happen over the 10-15 year timeline, but we don't work in that timeline, right? So we can only see like maybe 6 months to 12 months, right? And we see, I think, within that months, I think we believe that there's going to be a lot more people that are going to be coming out of the woods in terms of maybe they're hurt, maybe they want to get out of the industry, and we're here forever. Like, I mean, like as long as like I think my ADHD is very happy within this industry. Maybe sometimes it's too much. 2022 was like definitely a lot. But like I'm planning to stay in the industry for as long as I can. I can predict. So I think for us, it's all about taking that opportunity in the next 3 to 6 months, or maybe next 3 quarters, on how we can go forward and build our competitive advantage by noticing but also executing on some of these opportunities that might be dropping in front of us. Yeah,
brilliant. Makes perfect sense.
Yeah.
Makes perfect sense. Cool. Well, listen, really appreciate you coming in today, and it's been really eye-opening for me to, I guess, hear from you on the inside in terms of things you guys are looking at and your approach. And as I said earlier in the show, do go check out Illuminati and the M6 Labs kind of research that they're doing. It's really great stuff. Where can people find you online if they want to get to know you and learn more about you? If you want to share, you don't have to.
Like I have a Twitter. It's just my name, Garlam Won. My Twitter, like once you look at it, like it's gonna be very different than this conversation. I don't share any of this on my Twitter. It's usually me just shit posting on there with random stuff that are like very like just like that I'm posting this from the bathroom. So it's like if you do want to check that out, sure, I have a Twitter account. But yeah, other than that, our newsletter at M6 Labs, and we have a channel called M6 Labs Daily, I think, on Telegram. So definitely check those out. You can find all of those on my Twitter as well. So yeah, I think those are places.
Awesome. I mean, based on the way you just sold your Twitter page, I reckon you're going to get more new followers from this show than any other guest.
Yeah.
Awesome. Well, listen, thank you so much for coming in.
Thank you.
Yeah, it's
really
been
fun.
great. This has been another episode of Token Talks. Thank you for tuning in. If you want to see more episodes like this, please don't forget to like and subscribe. And yeah, big thank you for tuning in again. Thanks, Galam.